What's up, guys? It's Migs with Market Open. I want to do the midday market recap. Um, the market was gapping up this morning. SPY, it wasn't really gapping up by much. Kind of just went flat and it started going up this morning slightly. So as you can see here, it was very choppy this morning. This is what it looked like. It went up, down, up, down. It came back up and just went down, and it was just a chop fest this morning. There are just some days where the market doesn't have a direction, so you don't really know exactly which way to go, which way to be would be your best bet, because you always want to go with what the market is doing. If the market's headed up, you want to be going long. If the market's going down, then obviously you want to be going short. But as you can see here, kind of hard when the market's all over the place. I'll put it in the 5-minute. So URBN was the first trade this morning. I believe it's like Urban Outfitters or something like that. So it was gapping down this morning, and I took it short right under 32 right here. All right, it's not any sort of pattern or anything. It's just a lot of the times whenever I see a stock that's gapping down, it fails to move any higher, then you can short it at a certain point where you think that there is no point of it coming back. So as you can see here, I shorted 400 shares right at 32.01. It broke down all the way down here to 31.60. I was risking about the top of this. So I was risking about 30 cents, 32.27. So I was risking about somewhere around 30 cents. I was looking to get a little bit more out of it. But as you can see, just within this 1-minute candle, it flashed down. It found a bunch of buyers right at 31.60. I thought about getting out, but it flashed right back up. I was like, okay, well maybe, it'll bounce up and then start heading down a little bit lower. No, as you can see on here, I didn't actually get kicked out of this. I'm actually kind of proud of myself, because it's something that we try to work on in the room all the time, is do not get out of a trade if it's a fast moving candle. Most likely it is just a shakeout. A shakeout would be either that or a fat finger. Maybe somebody accidentally bought 100,000 shares instead of 10,000 shares or something like that, and the price just fills up really fast. As you can see, it flashed up past my stop. I just held it, and it came right back down. And it actually came back down to 31.74-ish. So I could have actually gotten out with a profit, but I was like, okay, I think it looks like it's going to fail. It didn't. It actually kept going higher. I ended up losing $132 on that trade. So I got kicked out right there. Let's see here. Right here around 32.14, I actually decided to get rid of half of my shares because it looks like it was holding the 9 and VWAP. When it crashed down below 32 again, I refilled those shorts back up, so I got these 200 shares back, and then I got kicked out at 32.28. So yeah, very unfortunate. I thought it was gonna, I thought it was really gonna crash after that quick flash up and fail, but it just didn't really quite work. All right, so the next trade I took was ATUS. What did I do with ATUS? I went long. This is actually the one I lost the most money on. Right here. Which I think I ended up taking it on the 1-minute chart, which I really should not have. I'm going to say I probably took it somewhere around here. 9.48. Yep. Took it right here. I was supposed to go long over 24.40. As you can see, I got filled at 24.42. Right after that, it actually never came back. I should have gone long, probably over the high of this candle here, which is 24.43. Because as you can see, it came up here, got rejected, came up here, got rejected again, came back. It kept getting rejected right there at the 24.40. And if it would have broke this 24.43, that means that the sellers that were there are no longer there anymore. So then I would have been able to go up. But bought it a little too early. I doubled down on my shares. Not a smart move. Obviously, it went down. I sold it literally a minute later. I believe this was my stop right here. Yeah, 24.15. Got kicked out at 24.13. Lost $236. Definitely the wrong place to double up. After 15 minutes, I should not have been taking anything on a 1 minute or a 1 minute chart. It's kind of my fault. But even if I did, I should have taken it over 24.43, which it never crossed. So that's my B. All right. Next trade I took was UAA. I believe I took this short right here. Whoa, this looks like a mess. All right. Let me look at the 5-minute chart. This probably looks a little cleaner. Took it short right here under 1540. By rule of thumb, most of the times I will, well, 99% of the times, whenever I take something short, I'll take it short underneath VWAP and underneath the 9-moving average. So as you can see here, these large wicks right here means that it's failing to move up the high and come down. So I went ahead and shorted it right here at 1540. Shorted it right here at 1540. It kept coming down. I got out. I held it for actually quite a while. Let's see here. Right around the 25 mark. As you can see, it actually went down a lot lower. It's just during that time, I believe the market was actually turning around. So, like I said earlier, the market was very choppy this morning. So, it's probably around here, and this time around 10. Let's see here. Yeah, so as you can see here, 10, 10:15, it threw up a hammer, and it started heading back up. So, I knew that we didn't really quite have a direction on the market, so I chose just to take right under, what was it? Right under $100. The spread got me a little bit, so I ended up getting $73 out of it. But as you can see, if I would have held it, I would have gotten the full amount if I wanted. Let's see here. It's a 15. Yeah. So I could have gotten a little bit more out of it, but I wasn't really trying to play too risky this morning. After taking that $236 loss, I knew I needed to take small steps forward to try and get that back, or at least make it a little bit smaller. So I ended up taking the $73. Don't really regret it. Let's see here. Next trade was EXPR. I believe it was the same type of trade. Yeah, so it was exactly the same type of trade. I put my stop over, let's see here. Put my stop over the highs at 820. I shorted 500 shares right at 8. I took 400 off at 785, so about 15 cents. It's a little bit less than what I usually like. But the same thing during that time, the market was making that move back up, so I kind of figured it was going to do exactly just that. So I took the 15 cents instead of chancing it. So I ended up making $75 on that. Next trade I took, hopefully that makes sense to you guys, because EXPR and Under Armour are basically exactly the same type of trade. So let's see here. So it moves up. It's a stock that's gapping down. It right off the bat, it starts moving higher, and then it fails to move higher. And right around the 9 in VWAP, so I kind of use the 9 VWAP and the whole number as resistance on the way back up. So I shorted it at the whole number. I was hoping that it would crash down, and if it comes back and retest it, it wouldn't be able to hold the whole number. So I took that into consideration with what the market was doing when it came back and started dipping. So the strategy did work, and it couldn't hold the 9. So as you can see, it couldn't hold the $8 mark. But around 11:30, I just kind of get rid of everything just to move on with my day. I don't want to have any open positions. So as you can see, UAA, I made $73. I got rid of it at, where did I get rid of it at? 1523 and 1525. Or, no, that's EXPR. 785 was the last 100 shares that I got rid of. Now, let's talk about WTW. WTW was actually something that was not on my scans this morning. I knew that it had made a really big move yesterday. So as you can see, WTW, which is Weight Watchers, opened up at 47. It came all the way up to 53. So that's a considerably large move. I think it had news yesterday. So somebody else was watching it in the room, and they called it out. They called it out over, I believe it was 55. Yeah, so it was over 55. I took 200 shares long because I was willing to risk to 54.16 right here. So as you can see, it broke. It came right up to 55.84, which now looking back on it, I should have just taken it and just moved on with my day. But because I had to hold through all of this, I was 6 cents of getting kicked out. So I was a little uneasy. I mean, it's not a lot of money, but when you're getting close to getting kicked out, you're just like, you don't want to lose that money. So, but as you can see, it's a perfect technical formation. This didn't really quite make it up to the 55. This made it up to the 55. The 9 is curling up right under it, so you have support. The VWAP's under it, and it's curling back up as well, and you have the whole number. So it's 1 tap, 2 tap, 3 taps. Right here, you buy it right at 55. You risk it down to, if I'm going long, I usually like to risk off of a red candle. If I'm going short, I usually like to risk off of a green candle. Because if you think about it, a red candle means that there are sellers in it, but if it stops at a certain point, that kind of signifies of where the sellers stop selling. So if you go below that, obviously the trend is broken. And same thing if you're going short and there's a lot of buyers, and if the buyers stop at a certain spot, that means if it goes above that, obviously the trend is broken. So I like to risk my stuff off of the opposite of what I'm doing. Hopefully that makes sense. So I ended up making it through this pullback. I honestly should have added. This is something I've been working on. I should have added right here at the break of 55. But I actually ended up getting rid of 100 shares at 54.75. I think I lost about $25 on that. I didn't want to lose the full amount because during that time the market was pulling back. So I remember it was actually this candle right here. So if you can see, the market was at the highs, but out of nowhere it just plummeted straight down. And I started to unload some of my position. So if it did come back to my stop, I didn't lose the full amount. Because remember, these bigger stocks, they follow a lot of what the market is doing. So if the market just plummets, most likely the stock that you're with or you're in is most likely going to plummet as well. But as you can see, it got caught, which is basically this little pullback, and it started heading higher, which it did. I added the shares that I got rid of after holding through that pullback. I added the shares back at 55. And as you can see, it started climbing back up. I got rid of 150 at 55.67, and I got rid of the last 50, or 150 at 55.67, and got rid of the last 50 at 55.74. Now, I knew that the market was making this kind of roller coaster type deal, and I just want to explain to you guys, there are just some days where the market is not going to give you any money at all. Like, you're just going to lose money. So all you can do is try to mitigate that risk by either making your loss a little bit smaller or just playing it safe, losing less, and just stepping away from the market. Because you can always just come back tomorrow and just live to fight another day. So I didn't really want to stick around as I knew that the market was kind of making this chop. It didn't really want to make up its mind. But as you can see later on, now it's deciding to go a certain way. So it's starting to go up. It hasn't closed the gap for the day, though. It hasn't closed the gap, but at least the market has picked a way that it wants to go. So if you're still trading during this time, you'd be better off going long instead of going short. You always want to go with the trend. So that is it for me today. If you guys have any questions, make sure to leave it down in the comment section below. Also, make sure to hit the little bell button. It'll notify you next time I put out a new video. And I will talk to you guys next time.